Welcome back to the Stock Chart Report. So check this out. You all know it. It's called a cup and handle. It's kind of two of them. So the one on the right in the blue background is more round, like a real cup. And then the one on the left is kind of the ugly one, where it's like they drew it, but it's kind of ugly. And then if you go down here, it says to buy this trade, wait till the price breaks above the neckline. So you can see they got the neckline in there drawn. So I saw this a while ago on ServiceNow. It's easier to see it on the 5-year. Let's flip it over to the 5-year. Whoops. There we go. You can see it really easily there. It's like, okay, there's the cup. There's the top of one side of the cup. There's the cup. There's the top of the other side of the cup. There's the handle. But at the time, I didn't read the definition about buying at the neckline. In other words, it's not saying to buy it when it first creates one side of the cup at the neckline. It's saying buy it after the handle gets up to the neckline. I didn't read the definition. I was just like, oh, there's a cup and handle. And I got all excited. So I'm like, I'm getting in, you know. It's easier to see it close up now on here. So here's the top of the cup. And here's the other side of the cup. Okay. Some could even say this might have been a cup. And this was the handle. And then it broke the neckline. And there it was. But it seems like it formed it again all over again. So at the time, I didn't read the definition. I was just like, oh, I'm just going to buy the handle. So I bought the handle like somewhere over here, I think, at like 100 and something. And then it just kept going down and going down. And then it was kind of felt like just owning the falling knife. And I was just like, this sucks. I ended up getting out. The other thing to see is like there's the bottom of the cup. 83, 87, 84, 87. And it ended up bouncing off of, right around there. 89. Might have been a little bit lower because it's on the 6 month. Let's see if we can see it on the 1 month. 89. But really, the way the instructions on this thing say is the neckline. So should not have bought it until 124, and then it never gets there. So that kind of goes to saying, hey, maybe the neckline was really this cup and not this cup. Regardless, it did bounce. So it went up from the bottom of the handle, 89, but it never made it to the proper entry point. But there was a bounce there. So you could have probably played that wrong and still ended up making money. I myself realized, I think I got in here like at 112 or 114, and I rode it all the way down, and I was like, this sucks. It's just like a falling knife. So there's a Lockheed Martin. There's a much cleaner cup and handle here on the 6 month right here. So 548, 545. There's the bottom of the cup. 491. Here's the handle. 508. So this time I might buy if it gets to 491 and ride it all the way up again. Knowing how that one on ServiceNow went. But according to those instructions, you would wait till 548, and then you get to make all this upside move if it breaks out. To me, I'd rather kind of own it at the, because there's a clean double bottom right there at the bottom of the cup. Rather kind of own it at the 508 to 491 range and ride the bounce and see how high it can go. And maybe it fails or rejects somewhere at the 540 to 548 level. Maybe it breaks out and then it completes what's known as the handle bull run. See how it's like, oh, once it's past the neckline, then it's the bull run. So, and then we saw over here, it never got past the neckline, and then it just failed out. But over here, as soon as it got past if you drew a line from the top of this, 136, to the top of this side of the cup, 124, that probably puts you like right in here at 101. if you drew an imaginary line from this 136 to this 124, probably put you right in here. So as soon as it broke out there, you could see it did run up just like a cup and handle would, you'd expect it to. You might also say this is the entire cup, so 135 to 135. But I think what we saw here was this was one side of the cup, this was one side of the cup. It did what it said it was going to do. There's the handle. There's all the, make its way back up to the neckline. There's the top of the neckline on the imaginary line. Slanted neckline, right? From here to here. It puts you right here. If I drew a line right through there, it's pretty straight. Diagonal. And then, boom, it ran up. I didn't see that one when it came out. I'm looking at it now and seeing it. But I thought this one, 124, oh, there it was, 124. I thought 124 to 124, there's the cup. But I got in at the wrong time. I got in like here at like 112 or something. Ended up going all the way down. And then I was like, oh, I got in some more. I think I doubled my position at 104. And then kept riding, and the knife falling down. And then I just ended up getting out at the bottom thinking it's never going to happen. It's taking too long. But now that I read the thing, it's like, okay, I got in at the completely wrong time of the experiment. So looking at this one, thinking like, okay, either you wait till it gets to 530, 540, 548, probably closer to 540, 548, and then you get in, like the instructions are saying on Google, over here at the bottom where it says how to buy this pattern, how to buy it, or how to trade it. Or you take the lesson we just learned over here, that the bottom was really the bottom of this cup, 84, 89, 87, 89, boom. And then even if it never breaks out to the top of the neckline, there's still some room there. So for me personally, since this is a clean double bottom, I'm going to look to get in between the 491 is kind of where I want to be in. That way, even if it never breaks out to the neckline, hopefully catch a bounce from 491 to 530, maybe as high as 548. And then at 548, we know that's the neckline. That's the place that it's telling us to traditionally buy a cup and handle from. So if it ends up breaking out from there, even better, because look at all this upside potential here, all the way to 598. So there's ample upside potential there, especially knowing the Iran war just kicked back off again. We're talking about Lockheed Martin here. I mean, it's a company that definitely has military contracts, you know. We'd have to look and see if they got awarded any new, but they're trying to pass budget bills right now to give them more, to give the military industrial complex more money, and this is one part of the 6 that we track as far as the military is concerned. So the 6 that I track right now is LMT, NOC, LHX, RTX, GD, and I can't think of the other one right now. Let's see. Defense stocks. GD, NOC, LMT, LHX, RTX, and Boeing. So I like this play. I'm looking at this one, thinking, okay, let the handle come down a little bit more. Let it come down. And then, you know, maybe when it breaks out to 513, it does make it to 530, 548, 540, 548. And if it fails there, sell somewhere off of the rejection. If it just rolls on through it, there's so much more upside there. So I like that. Wanted to share that with y'all ahead of time. I know sometimes people say that people that have a technical analysis channel are just telling you shit after the fact. But the point of technical analysis is to learn how to read and view the charts so that you can pick up on moves that are coming ahead. And in this case, here's a move that's likely coming in the future. This handle's eventually going to get down to the bottom, whether it's 503, whether it's 491. We're only $5 away from 503. And that would make sense, right? If people get in at the bounce at 503 and then Wall Street shakes the tree and pushes the price down to 490, and then it's going to come back up again. And then where's it going to come up to? Well, it's going to come up to here, 516. Then if it still has some legs, it's going to come to 530. Then if it has some more legs, it's somewhere between 540 and 548. Then it may get rejected in there, 540. It may keep on rolling, 545 to 548. If it breaks through that, there's plenty of headroom there, ample amounts of headroom. And then the next point of resistance is this notch where it double bottoms lower. So that's 598 to 610. There's a lot of room there. So I like this potential trade coming. And like I said, for me, I'm not going to wait till it gets all the way up here to 540, because then if it does what Service Now did, that's the end of the run. But if it somehow breaks out from there, great. There's even more upside. But at least I know, like, hey, this is a clean double bottom. Anything between 503 and 491, that's kind of the target zone. 493, that's the target zone to get in and try to ride this little boop back up to 540, 535, 530, 540, 545, 548. I wanted to share that with y'all.